here with Robert Sinche, RBS Securities. Bob Sinche, undershoot, overshoot. I like how you put this. Wither the dollar. I mean, the last couple of days, it's sort of a pause, but do we just revert to a relentlessly weaker DXY and a stronger euro?
Well, certainly I think the downside risks persist, Tom. You know, it's still a long way in market time to the end of June when the Fed ends its quantitative easing policy. So we do think there's still some downside risks here in the near term.
Let's bring up a chart here. Synthetic euro, which is a Deutsche Mark, and then the euro picked up 10 years ago. I can't believe I'm saying that, 10 years ago. And what I would point here, Bob Sinche, is when the line goes up and it reaches a peak, it does get very peaky. There's almost a political response to that weak dollar, strong euro. When will we see that political response come in?
Well, I'm not sure we're going to see the political response out of this side of the pond. Certainly the administration and I think the Fed aren't really protesting the weak dollar, although I think a number of consumers are starting to find it a bit unpleasant. The real protests, if they come, will have to come from the other side of the ocean. And my guess is if we get through 150 and see any signs of weakening production activity in the Eurozone, and particularly Germany, we'll start to hear some noise pretty quickly.
So we hear the noise and we talk about brutal, the word that President Trichet uses. What is the outcome of that? Do they dial 1-800-White House and complain? Does it become a State Department issue? Is it a Geithner issue? What is the path if we get to 150, 151, 152?
You know, I think it'll just be market commentary. There's always ongoing dialogue in the background, but certainly, you know, right now, the Fed and the Treasury are still concerned about stimulating the U.S. economy, and the ECB is still concerned about restraining inflation pressure in the Eurozone. So both of those factors would suggest that they'll be pretty comfortable with euro-dollar creeping a little bit higher here, as the stronger euro will help blunt some of the increases in dollar-denominated commodity prices for the Eurozone economies.
Let's switch gears. Bob Sinche, you wrote a terrific piece on the renminbi. And folks, it's math-free May, but I'm sorry, this is an elegant chart. It's a one standard deviation trend of the recent appreciation of renminbi. The white line going down is that stronger yuan, and there is the Bloomberg regression across it. It's remarkably contained, Bob Sinche, because they're managing it, and we bounced right off that one standard deviation. Victor, go down there. Get the tears out of your eyes, Victor. In the lower right corner is where that white line bounces right off the green line. I sound like the Onion magazine. Bob Sinche, what does that signal to you?
Well, you know, I think when the Chinese initially reinstituted some flexibility in the exchange rate last June, we did see a fair amount of volatility in the exchange rate. What's interesting is we've gotten into this year, the variation around that trend line has actually shrunk to the point where, as you said, if you get to the one standard deviation topside range, it tends to come back down, and the same thing just in the last few days on the downside. So it does look like the Chinese authorities are maintaining their rate of appreciation, but the day-to-day volatility really has been reduced, despite the fact that there's been some pretty good volatility in the dollar this year.
Do you have a level of the yuan where we can say the Chinese currency is delinked from the dollar? Are we there, or are we going to get there this year?
Oh, like that car trip you and Pim are going to take. I don't think we're there yet. You know, I think that, you know, you just look at a Big Mac index that was released a little while ago, and it was saying that the RMB might have been as much as 40% still undervalued versus the dollar. I think that's extreme. But again, this is a very gradual process, and I don't think we're anywhere near what people would think would be a long-term equilibrium.
Wow, I see that headline down there, folks. Twitter to buy Tweetdeck. For those in social media, that's a big deal. I mean, that's like Sony ATV, Warner Music. Twitter to buy Tweetdeck. Very cool. Note of the day. Let's go to it with Bob Sinche. It's, of course, William H. Gross. He publishes once a month. I urge you to read this note. Well done. The Keene mutiny. There should be little doubt that simply holding treasuries at these yield levels for an extended period of time represents an abdication of responsibility. How do you play currencies, Bob Sinche, if you assume a higher interest rate regime?
Well, if we get that higher interest rate regime here in the U.S., I think that will be cyclically supportive of the dollar. Certainly, The dollar has been a funding currency. It's been the favorite short currency out there. Might have reached a bit of an extreme in the last few days. We need a little bit of consolidation. But nonetheless, there's very little cyclical reason to own the dollar, and certainly no structural reason to hold the dollar. You know, Bill Gross talks about not wanting to hold treasuries, but that's what we ask foreigners to do on a regular basis. Each month, we crank out a trade deficit, a current account deficit, supply additional dollars to the rest of the world. We continue to ask foreign reserve holders, reserve banks, to hold more of those dollars and hold them primarily in treasuries. And that's a tough case to make on a longer-term basis.
Bob Sinche, thank you so much with RBS Securities.